It's been a while since I made a video. I thought I'd make some updates. I ran my weekly buy signal scan this morning. I actually ran it yesterday too, but mostly stocks are showing up. Here's a crypto that showed up. It's called Prime. If you notice, it's on this one bar going up. So most of the time when you get this one bar like over here, like you got in January of 24 this year, we had a nice rally. Now it helps if you have commercial participation in crypto, which we do have right now. We've got Bitcoin and Ethereum. The commercials are pretty much all in. I'll show you that here in a little bit, but on the futures, you look at BITO, the Bitcoin ETF. It's set up on a +1 weekly. Look at your weekly chart on it. You got to have access to this software. It's called Symbolic.com. Like I said, I pay on about $200 a month. OHI looks really good. I'm trying to buy it today or tomorrow. It's on a +1. It's getting close to a 13. So that's high stakes poker, but if everything plays nice going into the election, we should get, at least a couple weeks rally, maybe 3 to 4 week rally out of it, hopefully. And there's nothing wrong with holding it. I mean, the thing pays a 6.5% dividend. So they invest in hospitals and assisted living facilities. And as long as the baby boomers are still alive, they're going to need more and more hospitals and eventually assisted living. There's even a theory that says there's not enough assisted living facilities to take care of all the baby boomers. If they all need it on the same day right now, there's not enough assisted living in America. So I don't know what they're going to do with that. But anyway, so the daily chart looks decent. It's on a +5. If you could get it anywhere around this 40, 48, I think I'm bidding somewhere. Let me turn my Ichimoku on. Let's see. Yeah, I think I'm bidding around 40.72, I think, or 40.74. I mean, it could pull back anywhere in here. I would say 40.74 is what I see. I want to say I looked at it on TradingView.com. Went to a 4-hour chart. Yeah, 40.27 is what I bid. That's based on all the price action, pre-market, after hours market, and everything. So I think that's a decent level. May not get it, but throw it in. It's kind of like setting a fishing line. You either get it or you don't. But back to this. The Prime looks pretty good. None of this is financial advice. All entertainment, educational purposes only, of course. But the daily looks pretty good. It's on a +4. As long as it finishes out the week strong, which I think it will. Now you may get another, sideways to down day tomorrow. I don't know. On Prime, I'd probably bid 9.03. Might get this 8.90, somewhere in there. JUV, it looked decent. Let me make sure I think it closed out the week strong. Yeah, it's on a +2 already. So that's confirmation. That's already confirmed that it's good to go. Now we missed it. We missed a big day today. That's 15%. I should have bought some of it, I guess. But, had a bunch of things going yesterday. It can still pull back. On this one, I'd probably throw in $1.80 bid if you're going to play JUV. Berkshire B looks pretty decent. It was set up on the 30th weekly. You see it had the +1 count. kind of went sideways last week. It's barely up a little bit this week. You might get a retrace next week at that 459.25. Like I said, daily, it's on a +5. I like that 464.93, 95. Get round up to 95. If you go to a 4-hour chart, it's a little extended here. It needs to cool off. It could hold the top of this cloud, 465, but my guess probably come down at least to 460.25. Might test this 458.80. Could even test the bottom of this cloud here, 456.75 or 455.35, round up to 35 for the cloud. You know, you anticipating a pullback possibly to the bottom of this cloud right here, 456.18. Could he do 456.30? If you're trying to buy it in a 401k, really you need to wait until it bottoms out and starts back up and breaks this downtrend on a 4-hour chart, in my professional opinion. But what I know, I mean, I've only been doing this 12 years, so, you know, what do I know? I've only spent 20 grand to learn how to do this, and still can't do it for a living because I don't have enough time with a full-time job. But let's see, what is this thing doing? Watch your eyes, I'm going to refresh this thing. All right, yeah, it blinds everybody when I do that. Let's see, weekly. Yeah, it's on a +3. It's not doing anything yet. That's really a good time to buy it when it's going sideways. Usually it does that for about 3 weeks. Your first 3 weeks, you either get a blowout on week number 1 or it'll go sideways for about 3 weeks. See, I don't like this. You got a down day with a +1. I don't like that. That's weakness. But I mean, it can still work. You know, they could be just accumulating. This is on Coinbase. So, yeah, you're not on a plus count yet, even on a 4-hour chart. I would wait at least until it draw a trend line right here to there, and on a 4-hour chart. And when your price action breaks above that 4-hour down trend line right here, I'll show you what I'm talking about. Line. I start right there, and I draw it right there. So I want the price to be above this right here. It ideally needs to get above at least 11. If it was going to break today, you would actually have to get above whatever this is. What is that? No, that's $1.23. Say $1.23. If it does it tomorrow, it would need $1, say 21.5. But most likely it's going to continue down to the downside today. My guess, it could even come down to this $1.07, $1.08, $0.08 would be my target zone here. It's a disqualified buy risk level right here on a 4-hour chart. If this goes down to a 9 count, which most likely it will, I'd say $1.10, $1.11. What was that, $1.07, $1.08? Somewhere in this area would be my guesstimation on SEAM. Then we go to the futures. I'll show you what the commercial money's doing. And this has worked a high percentage of the time here. So if you put this on a weekly chart, this is measuring Bitcoin futures. It's based on the Commitment of Traders Index. That Larry Williams created this indicator, and it works. It prints money on commodities. this tracks what the big money's doing, right? The smart money, the big money, commercial money. Most likely your hedge funds, your brokers, maybe even some investment banks, some of your billionaires, multi-billionaires, multi-millionaires. This tracks their big money. Okay, so clearly, I mean, once you got above this 74 level at the end of September, it peaked out in October 06, around the 6th of October. Now it started back down. That's confirmation that now that it's going up, they're going to start slowly selling each and every day, each and every week. As it goes up, they slowly get out of their position. As it's going up, they're slowly getting out. So that way, when it finally peaks out, they've got the majority of their position sold. And then, when it crashes, then, they're out, and the public's sitting there holding the bag. That's the way it works 90% of the time. That's why the public loses money 90% of the time, and the hedge funds and the banks and everybody else makes money 90% of the time. So if you learn how to use this, it's definitely worth the money. You got to get Larry Williams' indicator package on this Symbolic.com. It's like $40 a month, but it's the best money you'll ever invest, I think. If you learn how to use this software, this is what the hedge fund managers use to get an advantage over other hedge funds, even. So this isn't the real software. The full package software, you have to rent it from Bloomberg for $2,600 a month every single month. So I mean, that puts it out of reach for most amateur investors or traders, So, but Symbolic is it's a beta test version that they're offering to the public for like $100 a month for the basic package, and then you can add Williams indicators. You can add the scan engine over here, which is really good. I think it's like $70 or $80 a month for the scan engine, so you can set up your own scans. It's not hard to do it. You play around with it, you'll finally figure it out. Or you can just buy my course at CryptoCrazyCowboy.com, and I'll show you exactly how to do it for $500. If not, figure it out yourself. Not my problem. I ain't got time to. I'm sorry, but I don't have time to hold everybody's hands. I've got 9,000 different things going. I need to be getting to work on my other side project here in about 20 minutes. So I just thought I'd make a quick video. But anyhow, let's see. Where was we? Ethereum. Ethereum was in the buy zone. Now it's confirmed. They're starting to sell off. So usually when it starts to go up, they'll start to sell out of their position, which is what they're doing. So my guess is this could go up to a 9 count. It may bump its head right here on the top, bottom of this cloud around 3,000. If it can break through it and hold it, it could go to 34, 3,500, 3,750. You could have come up here and make a new high at 43.65, but nobody really knows until you start seeing major momentum. I honestly thought we would have better momentum than what we have right now, but now Bitcoin is stronger than Ethereum. See, it's already above the cloud. It's holding. Next week, it may come back and retest it, 64, 65,000, somewhere in there, be my guess. But, we're having a pretty good week this week. We're up 7%. That's not huge, but, it's better than being down, I guess. Ethereum's up 6.4%, so it's right there holding with Bitcoin. The only thing that concerns me, and it really concerns me, is I can look at the futures of the Dow futures. You can see the big money is out. of Dow futures, and we're at a plus 9, and this little thing is called a sell setup perfection. that thing, you don't mess around with this thing right here. When you see this above a 9, that's pretty much getting close to the top. It could still go up for another 3 or 4 weeks. Or go sideways. Most likely it's going to hang around this 43,440 zone. That's probably going to be pretty close to the top. It could come up to 44,000, as a new high before the election. I don't doubt they're going to pump it up. They're going to try to sucker the public into coming in and, buying the top, which they usually do when it makes a record high and everybody buys in like a bunch of sheep, But you can see they were all in over here. They went heavy back here. That was in August, around August 10th, August 11th. And we got a pretty nice little rally out of it, it wasn't huge, but now you look at bonds. Usually they're going to go to bonds for safety. If they're thinking that we're going to get some kind of crash or some kind of decent sized correction after the election, most likely, I'm guessing December 10th, right here. See, they're starting to they were heavily invested in bonds right here. That's 30-year bonds. So that's a major red flag, in my opinion. Now, this could still come down. It could go sideways. They're going to accumulate their position. Looks like possibly till January 12th, but we're probably going to see some kind of spike on bonds early January, according to that, if that holds true. But yeah, back to the S&P 500. This is a mini spider. It's on a 9 count, sell perfection, weekly. That's a major sell signal. If you go to monthly, you got the same thing, I think. Yep, you got a 9, sell perfection. You're on 10, 11, so you could get possibly 2 more months out of this, right? You could get November, December. That would make it on a perfect 13 count. A lot of times on your 13s, you get a down candlestick where the bottom falls out of it. Now, sometimes it'll make a liar out of me. Maybe the S&P doesn't do that much. Doesn't look like it does it all that much. But anyway, it made a liar out of me. That's usually, if you look at stocks and crypto, most of the time your 13 counts on a daily format, they do tend to be down candles. But so like I said, this is keeping me up at night, because any kind of stock exposure, 401k, whatever you want to call it, stock exposure is going to be heavily affected. When this rolls over, it's going to be a significant downside. Now, you can measure that. Let's see, where's my measure tool on this thing? Here we go, price range. So let's say it goes from right here, goes down to the top of this cloud. Is that 186? Nah, it's not going to go down 186%, but you could easily see whatever it is. That's a 31% drop. That's 186 points. A 31.5% drop is what it could theoretically do. Now, this could take it a year or two to do it. Most likely a year and a half on an average recession is 18 to 24 months. So I would be anticipating that. That's somewhere around 402 is what the S&P mini the SPY could come down to. So that'd be like 4,000 on the actual S&P 500. I'd just be careful on that. You could definitely see that in the near future. Sometime next year, be my guess. Could even start as early as December 10th. They might let it go until Christmas. If the Fed can actually accomplish a soft landing, what they call, by cutting rates slowly, we might be okay on this. But as long as it's called the what you call it, ismworld.org. Go to ismworld.org. You got to accept all the cookies. You got to come down, look for manufacturing index, reports. Maybe it's this right here. Day strategic. Yeah, I've got it saved on my cell phone, but publications. Yeah, I don't know. For individuals, you don't have to be a member. It's free to the public, but manufacturing PMI, that's it right there. Hit enter. Search that, bro. Search it. Taiwan. We're not interested in Taiwan. Sections. Let's see. Content. Yeah, anyway, play around with that. It's called the manufacturing index. ISM on business, maybe? I don't know. Where's this thing at? Here we go, right here. Report, view report, hit agree. As long as this number right here is below 50, we're on thin ice of a recession. So this come right from a Goldman Sachs mentor. They use this. They teach all their hedge fund managers to use this. You're going to have to read all this stuff, what the respondents are saying. This is pretty much all your industry CEOs. They're being interviewed. Everything's weakness. There's no increase in sales. There's no backlog. There's no inventory stacking up because the economy is slowing down, and that's not good. So keep an eye on that. You can actually chart it if you come over here to. I've got it saved on mine. I think it's USBCOI is the ticker on it. If it'll actually pull up. What the heck is this? Apple. Why is that pulling Apple up right there? I don't want that. Why is it pulling Apple? That is weird. No, I don't want Apple, bro. Refresh, bro. USBCOI. Here we go. Switch to monthly. Yeah. Roll it. Okay. Pull this thing up. Here we go. Yeah, I got all this crap on here, but anyway, let me turn this stuff off so it doesn't confuse you, but here we go. Turn the script. Yeah. So this was the low right here. This is on that index that I just showed you. US ISM Purchasing Managers Index is what it's called. But so we made a low in June of 23 on this index. It was a 40, pretty much a 46. So anything around 45 is considered recession territory, is what I've been told by Raoul Pal, however he spells his name. Raoul, I don't know. He's whatever. So we need to break this down trend line pretty quickly. If we don't, this is most likely going to come back down to the downside. And if it does, it's going to confirm we're in a recession, right? So Now, your unemployment numbers are ideally, I think when that gets about 4 to 5%, that's when they'll officially announce, hey, we're in a recession. But by then, it's too late. You've already lost, 10, 20% of your money on the stock market because the hedge funds are tracking this. And this is a leading indicator as to what the economy's doing. If you come back over here in 2007, 2008, when we had that massive crash, it's doing the exact same thing that it did in 2007, 2008, right here. So you broke below it for a brief amount of time, and then you poked your head back above 50, which is supposed to be the all clear, and then you whipsawed back down to the downside, and that's when you got your, massive crash in 2008, the fall of October 2008. If you notice, over here, it's doing the same thing. You went below it right here in October of 22. You topped out over here April 21, when they were pumping money coming out of COVID. But so you went down here, you went sideways, you went, below 50 for like 16, 18 months, I think, whatever it was. And then just briefly in March, you went back above it, 50.3, and then right back down the very next month to 49.2. So it's doing the same playbook that it did 07, 08. So I would be very cautious of this. Because we remember what 07, 08 turned into, right? So I would be very cautious on that. Let's just keep that in the back of your mind, because that's why I'm not sold on this big market rally, because we got unemployment job numbers today. I think 241,000. You come over here, look at your economic data. Initial claims right here. These are jobless claims. Came out today at 8:30. 241,000 right there. You can track that stuff if you want to. Economic calendar news. I would definitely watch housing building permits. There's another big leading indicator. If you want to track that stuff, your building permits, your housing starts, your new housing sales, housing starts, that's coming out on the 18th of this month. I'll definitely keep an eye on that. That's another leading indicator that tells you how your economy's doing. Now, there are some predictions that say that housing, they may start building more next year. So I'll definitely watch that. I think the website for that is, let's see, that's under, I'll save that on my cell phone. Let's see. Yeah, tradingeconomics.com. So go over here, go to tradingeconomics.com. Did I spell that right? Tradingeconomics.com. A search for builder permits. Ah, come on, bro. Forecast. United States. Let's see. Here we go, building permits. And you can do maximum. Click this little forecast button up here at the top, and it'll kind of estimate. I changed that to a line format, but check it on a 1 year. We're in a W pattern. Looks like you broke above right here. This this high we had in June of this year. So as long as this continues to the upside, now seasonality wise, this is probably going to roll over this winter because most people don't build a house in January. It's hard to pour concrete without it freezing. So most likely it's going to be the spring until this starts to pick back up pretty strong. Now you might get some, October, November, but usually December, January, when it gets really cold. I mean, a lot of places, have so much snow up north that they can't build houses. So I would look in the spring. As long as this starts trailing up, that's a good sign. If say March, April, if this is still, going to the upside, following this forecast, we might kind of work our way out of this. But if this rolls over and makes a new low, that's a very bad sign. So, here's a little bookmark, tradingeconomics.com/United-States/building-permits. That's the website right there. Bookmark that thing. Save that. I'm going to save it myself. And because that is what you want to follow right there. You can follow GDP. I mean, there's all kind of things, labor, employment, unemployment. This is a really good website. If you don't want to, do all this hard work yourself, I would highly recommend to just follow this guy right here, Gareth Soloway, right here on YouTube. Search his name, Gareth Soloway. Or Verified Investing is his company. But he does a show right before. He does it 8 o'clock every morning, Monday through Friday. He does another one, Trading the Close, 5 minutes before the end of the day at 2:55 Central Time. Trades the last 5 minutes of the stock market before the bell rings at be 3 o'clock Central Time, 4 o'clock Eastern. But I watch this guy like a hawk, man. He's really good, and he's cut in. You can go to his website if you want to. He's probably got a link right here you could click. He's got a Lux Algo thing that he's got his own indicator, set up. He doesn't have a link on his show. What are you doing, Gareth? You got to advertise, bro. Just go to verified investing.com, I think is what it is. Jimmy Verified Investing. Yeah, I didn't do it right. Dang it. Just do verifiedinvesting.com. Here we go. That's him right there. So you can go to his homepage.
Because I want to make bank, bro.
Oh, time to get to work. Here's the latest show. So he's got, all these economic indicators, buying and selling indicator for the stock market. And I'm not affiliated with him, but this guy's got 25 years of education. Initial claims, unemployment, trending higher. That's not good. This is people getting laid off. He's monitoring this 300,000 level right here on initial claims. We're at 258,000 on the last data. That was updated October 13th. So he'll need to update that today. But let's play around on his website, see what you come up with. But he's got a FedWatch tool also. It's pretty good right here on this FedWatch. Your stock market's getting in the greed. Crypto's getting in the greed. That's usually a decent time to take profits, or pretty close to it. So right now, we've got an 85% chance that the Fed cuts rates in November. Over here's your dates. It's a FedWatch tool. this thing's pretty good. If you're trying to, buy a house or whatever, you can kind of plan it. You got a 75% chance they cut again in December. So they could cut anywhere from 0.25 to at least 0.5% by December 18th. So, if you're thinking about buying a house, not a bad idea to wait till December, maybe January even. You got a 54% chance they cut in January. I guess there's no meeting in February, but you got almost a 50% they cut in March. And then again in probably May. So by next spring, interest rates could be at least 2% lower, right? So just something to think about. That'll at least stimulate the economy if that's true. But historically, the stock market has dropped after the Fed starts cutting rates. It's because if they have to start cutting rates, that's telling the stock market hedge funds that, hey, there's a problem in the economy that the Fed thinks they need to stimulate the economy with cheap interest and start printing money, most likely, to stimulate the economy. So there's another thing you can watch. It's called the M2 money supply. There it is right there. It's a Federal Reserve. You're tracking what the Federal Reserve is doing. And as long as they're printing money, you can see what it did. They started pulling money out of the economy in the spring of 22, and you saw the stock market sell off really hard and pretty much all year in 2022. Now they started pumping money back in. You go to a 1-year chart, they pretty much bottomed out pulling money out in October of 23. And they've been slowly pumping money back in to the economy ever since. So as long as this M2 money supply line is going up, most likely the stock market, everything should continue to the upside. But if this ever starts to roll over on us like it did in 22, you see it peaked out right here in March of 22. The stock market actually rolled over in January of 22. It topped out in January of 22. So the hedge funds got wind of it. I'm sure they're all in this, together. If you're a banker, whatever, you probably know this stuff. But the average public doesn't have access to this stuff. They don't know even. I never even knew it existed until I was watching Raoul Pal's show, and he started figuring this out. Started watching it, tracking it. I'm sure hedge fund managers, they've been taught to track it. But you see what it did in 22. It didn't bottom out till April of 23 at least. I think actually October was the low. And then it took off. So that's what I'd look for. I would definitely keep an eye on that. If you're concerned about it. If not, some people just want to set it, forget it, and not worry about it. But we're within probably a year to 2 years at least of a recession, possibly even as early as December. You could start seeing this thing roll over and start selling off. Now, they're not going to announce we're in a recession until most people are down 10, 20%, right? So, but by then it's too late. If you've already lost 20, 30% of your 401k, you need to be selling at the top, not at the bottom, right? So that's what most people do. They sell at the bottom when it's close to the bottom, when you just can't take anymore. You sit there and you hang on for a year and a half, and then you're like, man, I've lost half of my money. I can't take it anymore, or 60 to 80% most likely is what happened in the last one. And then they're like, man, I got to get out. And when they start selling, they start dumping. That's usually pretty close to the bottom. It's a sad but true concept, but definitely keep an eye on this ISM purchasing index. That's a big factor right there. If we go below this 46, that's going to be massive, I think. But Anyway, I'll end this video. I don't want to ramble on too long, but like I say, none of this financial advice. You do you. Keep, you know, if you don't watch your money, somebody else will watch it for you. That's my favorite saying. So we'll catch y'all later.